Steve, what's going on today?
Well, thank you, Scott. Hey, everybody. Welcome to the June 7th edition of Office Hours. I'll be your host, Jamie Hodge. Got my trusty wingman in here as well, Steve Gomez.
Hello.
And welcome to another Monday session. What's going on over there, Steve?
Not much, just a drizzly June San Diego day.
Yeah, well, it seems like drizzly is the theme across, well, your state and my state. I think Texas is turning into a tropical rainforest for now, anyway. We'll see what happens. Um, so we shall see. Without further ado, let's get rolling here. And before we do that, just want to take a brief moment here to go over the disclaimer, make the lawyers sleep a little bit easier, and just make sure everybody is aware of the fact that all the information that we share with you guys in this webinar or any of the other ones we have coming at you on a weekly basis is for educational purposes only, simply meaning if you need investment advice, somebody to tell you what to buy, when to sell it, all that good stuff, please seek out someone who is licensed to be able to legally dispense that type of info to you, someone like a registered investment advisor or a Series 7 licensed stockbroker. So just to reiterate, everything that we share with you in these webinars is for educational purposes only. Moving right along here. We just wrapped up test drive. I'm sure we've got quite a few new people in the webinar today. So always just like to take a little bit of time at the top of the hour to let you know about the community that we've built around the scanner. All kind of starts up here with the trading room hosted by Mr. Barry Anderson. Barry's going to open the doors to the trading room about 30 minutes before the open every day. Great thing about our trading room is it's free and it is a high quality trading room. If you've shopped around on the web, looked for different trading rooms, any of those that are going to be worth their salt typically are going to come with a pretty pricey fee on a monthly basis, whereas that is not the case with us. It's free. It's one of the perks that you get for being part of the TI community. You don't even necessarily have to have an active subscription to get in there and get a login and see what it's all about. So if you have not done that yet, by all means, make use of that resource. Of course, on the Monday webinars, the 5 p.m. Eastern webinars, you get myself and Steve. Steve typically takes the steering wheel on Tuesdays for the 5 p.m. Eastern slot for the Trade of the Week webinar, and he's going to ride shotgun with Steve on Tuesdays. Wednesday is always entertaining, bringing our CEO and founder, Mr. Dan Merkin, along with our chief. I'm confused at what I should call Brad. I don't think he's the chief technical officer. I think he's the chief operating
Operations.
officer. Yes, COO. The COO, Brad Williams, and Dan Merkin, always entertaining with these two on Wednesdays at the 5 p.m. Eastern slot as they discuss many things, including new developments coming down the pipeline. Andy is going to round out the 5 p.m. Eastern slots on Thursday with the Trading Studio, and I'm going to ride shotgun with him. And of course, we have our daily support session, which is every weekday, Monday through Friday, starting at 12 p.m. and going into 1 p.m. Eastern, where we allocate that 1 hour for anything TI related. So if you have any questions about scanning, what filter is, just anything TI related, you can pop into the daily support session, get your question answered in a live environment with visuals and all that good stuff. So on the next slide here, it'll show you how to get there. So just this URL in the bottom left-hand corner here, which is basically just our home page, trade-ideas.com/live. That'll get you there. It's hosted on YouTube. So once you get there, you can bookmark that URL for easy access. Same bat time, same bat channel, each and every day, Monday through Friday, 12 p.m. to 1 p.m. Eastern. In addition to that, we've got some really great educational resources. These are some of the better ones, especially when you're new and just trying to get over that learning curve. We've got the TI University series, 101, 201, 301, and 401. This is a 4-part video series, and you can access it and find it from our YouTube Trade Ideas channel. So if you just cruise on over to YouTube, find the Trade Ideas channel, do a little search for TI University, boom, you'll get all these videos to come up and you can watch them at your leisure. But especially if you're brand new, 101 and 201 will certainly get you over that learning curve quicker than later. All right, well, if I can make my pointer work here. Okay, here we are at today's agenda. As we typically do, I'm gonna let Steve take the steering wheel here in just a second take a look at the overall tracking ETFs. Then we'll cruise on into the Holly recap. We're going to give you guys another peek at the container functionality, which is due out in, well, we're all testing version 5.5 right now. It's getting very close to being released as the beta, and that will give you guys the container functionality. But I'm going to give you a little peek at, some of the ways that you might be able to use that functionality. And of course, we'll just be scratching the surface as that functionality is released. There'll just be more and more things that we discover that we can do with it. So without further ado, I guess I'll kick it over to you, Steve, and we can take a look at those major tracking ETFs, overall
Sure.
market action, which it was a little lackluster today, unless you were the IWM.
Well, I got a few thoughts. I mean, it depends on what you're looking at. Lackluster, he leaves me with. So I'm going to circle this right there. We're going to start with the SPY. Okay, the SPY was lackluster in red, 0.08, not much to speak of over there. The big picture, obviously, as I've been saying, is the bouncing ball bouncing up the hill using the 50-day moving average as its support. But but what happens at these points? Is there enough umph to hold them in a sideways pattern and move them higher, or are they going to continue to revisit that 50-day moving average? While Jamie was speaking, well, I'll get to that in a second. Let me tie home the first point. The first point is we have a market that is no longer like it was last year, where we'd say, hey, the market was great. It was up 2% today across the board. No, the SPYs were up 0.08. But if you were over in small cap land, the market was up 1.33. It's funny, the IWM is quickly becoming, to me, the Russell 2000 is kind of becoming the barometer, the thermometer, thermostat, I think is the correct word, if you will, of how the rookie new retail meme traders, whatever you want to call them, this new generation that's been all of a sudden addicted to price action and speculation on that price action, they gravitate towards the smaller names, and the IWM is an imprint of that. And what we can see is it's been rather confused for the last 5 months as the S&P and the NASDAQ has moved higher. But Jamie makes a good point. It looks really poised and really interesting here today, and maybe today was just the beginning, the precursor of a nice movement out of clean air and these moving averages fanning out. And hey, if we get that, I think the headlines will continue to be glorious and rosy for the new initiated traders that are in the market now, because this is the kind of stuff they like. I've literally seen it in a Discord room when the IWM's down 2.5%, 3% on the day. They're all gloomy over there, but on a day like today, a lot of them are invested, their portfolios are green, and that's an observation I think is worth noting. But to tie it all back, the Qs we looked at, the S&P we looked at, okay, the NASDAQ was up 0.3 today. So this one kind of had the middle ground. As I was saying, we don't really have the days where you look back and you see everything was up 2%. We got one ETF, or let's put it, one index was up 1.5%. Another index was up 3.3, 0.4%, and one was red for the day. And then tomorrow, they all switch up. So I think tomorrow, based on that, I think tomorrow the NASDAQ could have a good day. It just seems like it kind of hung into second place here. Really nice push out of that that little fake pull, but I shouldn't say fake. These are what we need. You got to pull the arrow back sometimes before you can sling it higher. So watch the NASDAQ, watch the tech stocks tomorrow. I think they're even getting a little hint here after, they're getting a little creep up after hours. So watch tech stocks tomorrow. They pass the baton. It's just what they do. They're just passing the baton. Gone are the days where we seem to have a broad-based breadth rally where there's just all sectors in the heat map are green. Well, today you didn't see that. You saw some red and you saw the small cap stuff green, but I think tomorrow you might see tech. It's not really worth giving it back to Jamie until I talk about the trade of the week, which was just horrific today. Let me just try and zoom in. That is what we were looking at. There we go, over the weekend. A nice push off of earnings, sideways action, and a lot of stocks have been doing this lately. They've been taking their own sweet time, really sucking the blood out of the weak hands, and then pulling the arrow back and slinging higher. Well, lately, if you're the few out there that actually read the entire trade of the week, here's the official document. I've been giving some additional ideas to watch, and I'll let you know this was my basket of ideas, and the trading gods were having fun with me this weekend in saying I should select Cargill. Car Gurus. I keep making that mistake. And as we fast forward into today, just a horrible trigger faking everybody in, and then a giant red candle reversed to low. The low of Friday is technically our stop. So, we did a nice bounce on good volume on Friday. This is absolute craziness. I did not see that one coming on half the volume that we did on the up volume on Friday. So don't be surprised maybe if we get a little lift in the morning. But my God, if we just look at the other ones, I maybe could have let the trading gods let me play with. FNKO had a pretty decent. FNKO did what I would have expected the trade of the week car gurus to do, kind of build off of that candle on Friday. Okay, no harm, no foul there. We could have called FUBU. All right, that would have been nice, but it didn't really set up the way I wanted it to, but still strength over there. Soul, that's on the short list as well. That one had a nice day. And then the alternative fuels were just screaming to me on the weekend. You got Plug, Ballard, let's try that again, Ballard Power. Yeah, and then F-Cell. Would have been nice to just have the angels tap me on the shoulder and say, hey, F-Cell might have been the one to call over there, Steve. But nonetheless, the point is, don't forget to read what's at the bottom of the trade of the week, because I can't always have the good blessing of getting the right one. And hopefully some of you saw that and jumped on maybe some of those other stronger ones. But as far as the trade of the week, it's still in play. It did not take out Friday's lows. Let's see if we can get a little gap up after hours. Maybe we'll get a little relief tomorrow. We'll see what happens. All right, Jamie, wanted to talk about that.
Very good, sir. Thank you for that. Let me get that baton back from you. Okay, you should have eyes back on my screen, hopefully.
Mm-hmm.
Okay, so yes, thank you for that, Steve. We will see tomorrow. And of course, the SPY is just, it's just right up there. And we got the little red hammer today. But who knows? We got a lot of the week left. Of course, last week we only had 4 days. We got a full week this week. So we will see. Let's talk a little bit about my expectations via my CC readings this morning. And for those of you who might be new, I like to watch one of our compare count windows that is looking at any stock hitting a high or a low, capitalized with a market cap of 4 billion or higher. And I typically take a peek at this 15 minutes after the open to try to give me an idea of, well, is there more buying or selling in those big cap names? A lot of the times that can tell us which way the market might be headed. And typically it either works out with an immediate move or maybe it comes later in the day. So we can see right here, barely above what I consider important, okay? Typically like to see a bias of 55% one way or the other. The higher the better. 57, not too bad, but typically on the days where these really mean something, they're gonna be 60s and higher. So we got a mediocre bullish count after the first 15 minutes. Of course, this was on the big caps, not the IWM, 57%. And what did the SPY do? Well, kind of like what Steve was talking about the trade of the week. Well, kind of started off good, but then quickly released. Did gain ground in the latter part of the day. So we did get a significant move back up, not quite back up to the close. So this metric, just like any other metric, a lot of the times it's good, but it's never going to be 100%. So really no benefit, not a very good leading indicator for overall market action today. So we'll see what happens tomorrow. All right, I do see a question coming in about the compare count, so let me address that real quick here. Does the compare count have custom settings, or is that just automatic for large caps? Good question. I'll just drag it over here real quick before we proceed. You can spawn a compare count window from the toolbar anytime that you like, just by using new. But when you get one up, you're going to notice if we right click and go into configure, you got two separate sides. Okay, we got the green data side, we got the red data side, and these are each independent, for lack of a better term, alert windows. So if I hit configure on the green side, you'll see here are my filter settings, and then we're using just a new high as the alert. And then of course, on the red data side, I've got the exact same filter settings in place, but with new low, thus keeping track of those stocks meeting the filter criteria, hitting highs and lows. So yes, you can customize your compare count for anything that you feel would be appropriate to keep track of on a count basis. It's basically, we got this idea from the old metric called the tick, advancers versus decliners. This is just simply a way to create a custom tick based on what you feel might enhance your trading style. Okie dokie, moving right along. So not a big value today, and sometimes that happens. All right, so let's talk about Holly. Holly had a pretty good week last week overall. And of course, sometimes on Mondays, things don't go so good, but they didn't go so bad either. Kind of, I'll bring up that lackluster term again. If we focus on the toolbar over here, or the channel bar, well, my fingers aren't working very good today. We can see that Holly 1.0, or what we refer to as Holly Grail, had 5 signals. And these figures over here are based on trading 100 shares per trade. 2.0 kicking out 2 signals down 142. So roughly speaking, just slightly less than $1.50. And then Neo kicking out 4 trades and just being up a smidge here, assuming 100 shares per trade. So when we tally these up, we got 300 minus 150, let's just call it that. So up 150 bucks gross, trading 100 shares. Of course, that does not include commissions if you're trading in a commissioned environment versus a no commission environment. Now, to point out real quick here before we talk about the Holly trades, over here, these figures are based around 100 shares per trade. The values that you're seeing here in the P&L columns are based around risking $100 per trade. And we can easily pop into tools and tell the AI how we would like to report by clicking on options and just clicking on AI trade size. You can see right here, I'm just saying risk $100 per trade. Of course, if you do want to do, if you do want to do 100 shares per trade to mimic the channel bar, you can do that, or you can do dollars per trade. So we're just going to keep mine on risking 100 bucks per trade. But just in case anybody might be wondering why my numbers are different, for some strange reason, my single stock window decided to resize itself. Let me kick it back in here. And when we talk about the Holly recap, what I typically like to go over, if these are present during the day, would be conservative versus moderate spread, any potential trade rounds, which are typically based around stop outs when we see the AI getting stopped out. And then are there any good ad opportunities? You don't see any ad opportunities listed here because there just really weren't any great setups after the signal came, like a nice tight consolidation or some other thing that you might find appropriate. That's typically what I like to do with the AI signals is if they consolidate after the signal and we can identify a nice clean range break, that's always a great time to attempt to add or leverage that position. There just weren't really any of those to speak of today. We had a little bit of conservative versus moderate spread. So let's go ahead and take a look here. Get my pointer geared back up here. All right, so when we're talking about conservative versus moderate spread, we're looking for values that are larger in the moderate column at the close versus the conservative exit or the conservative profit that we're seeing over here. Now, GIII was the first trade out of the hopper today. It was a pretty fast moving stock. Not really any moderate profit there. We have a smaller number over here, but we did have a nice clean target hit on the GIII today. And this one came pretty quick, so I tell you what I'm gonna do. Just gonna shrink this down to 5-minute candles so we can get a better bead on the price action here. So you can see, not too bad of an entry signal coming right here at 33.51. And in a very short amount of time, in the next 5-minute bar actually, right here, that target was hit. So we get a very nice move in a short amount of time. That's always a good thing to have. You can see, kicked it on up a little bit more. I think we topped out right there at 35.80. Profit target was at 35.04. So it did run another 76 cents there before it snapped on back down, hugged that profit area for a little while, and then released all the way back down to the entry signal. Saw a lot of things doing this type of action today. So if you were quick on the draw, you got that profit target hit, had a little bit of time, even if you didn't get out any up here, had plenty of time to exit right at that profit target. So not a bad trade. It was just quick. You had to be pretty fast to get the GIII today. Now we do have a little bit of conservative versus moderate spread here, but I do want to point this out. Before Michael Noss got to retooling the AI strategies, there used to be a lot more conservative versus moderate spread. But what I'd like to point out here is on the timed holds, that's kind of went away now. Now we can have some conservative and moderate spread on a profit save or reduced risk. We used to be able to have them on timed holds, but if you notice now, all of the exit times or the timed holds for just about all the strategies are very close to close. So you can see here 245, 250, and 3. Just doesn't leave a whole lot of room to react. But having said that, if we do take a look at some of these up here, you can see we do have some decent spread here in SNCY, and it's kind of amazing that that much action is happening in the last 15 to 10 minutes, but that's what we had going on today. So this guy made it all day. Of course, SNCY, a trade coming out a little bit later in the day, 1:14 my time, which is 2:14 Eastern time. So not a bad entry, almost a stop out here. And then sure enough, last 1, 2, 3, 4, 5, last 25 minutes of the day, SNCY had the biggest move, right? So that's why we're seeing the spread here, even though this was a late day exit, almost to the tune of, well, this is a 2x factor, 64 on the conservative timed exit, where you see the little red arrow here. But if you would have held for another roughly 15 minutes, or actually a little bit less than 15, boom. Actually, what you're seeing right here is some of my brokerage plus tags. Sometimes the brokerage plus tags take over. Sometimes the AI tags take over. But the bottom line is this: exiting at 45 minutes, or excuse me, 15 minutes before the close, and this thing took a nice little run. You could have made almost double, but we're not used to seeing these so close to the close. So showing here, but not a whole lot of time to react. PM, pretty much the same song and dance. Now, I said there weren't many ad opportunities, and of course, this one coming late in the day, but I have to give it credit here. There was a nice little ad opportunity here going into the close, 1, 2, 3 in the last 15 minutes. It seems like a lot of these larger cap stocks ran today in the last 15 minutes. But here we have the nice buy signal coming from Holly at 98.15, and just kind of hemming and hawing around about midway through the entry point in this little break area here. So just a nice calm trade. Finally get a leg up, start building a nice little base here of consolidation, and then about 15 minutes before we break this level here, 98.32. Not a big monetary gain from dollars and cents, but a gain nonetheless. So this would have been a nice time to add to that position, even though we only had about 10 minutes left. You know, the chart speaks, price action is all that matters. And when this little guy did break out later in the day, took a nice leg up. So decent activity, or what we could call moderate versus conservative spread there, to the tune of about 6x. You know, if we just take that down to 25, 6, 150, a little over 6x, you could have made on the conservative exit versus the moderate profit exit. Now here's one, keeping with a little bit more tradition in the SEAS, because here, you know, and notice in PM, the large shaded area, or the ones that we were in all day, well, actually I take that back, SEAS, but note the shaded area here, okay? Not a bad buy signal coming here, 56.55. We get a nice little run up. I was in this trade. I was like, ooh, this thing is working out nice very quickly. Of course, just like a lot of stocks did today, we got that nice little pullback all the way back down to almost break even. And as they say, if it prints there, many times it's going to go trade there again. This was the case with SEAS. Got that nice wick up there. Mark that off. Not really a whole lot of ad opportunity there. This little shelf that it formed right here, yeah, you could have made a little bit of an ad there, 57.68. up to 58.18. Not a bad little period right there to leverage. Could have done without that wick, actually, would have been much more attractive down here. But whether you pay attention to wicks when you're talking about these things or body candles, that's kind of a personal preference. Of course, if we're playing by the rules, we have to use the wick. So a little bit of an ad opportunity, but it didn't last long before capitulating back down again. But once again, almost a 4x here in SEAS in conservative versus moderate profit there. I see the questions streaming in here. Let me just see if it's talking about what I'm talking about. And Anna, yes, we do record the 5 p.m. Eastern webinars. Scott usually has them posted to our YouTube channel later in the evening. It takes a while to process the videos and get them uploaded. So you might want to take a peek 3, 4, 5 hours later, and they should be up there. Okay, I have another question about the AI. How do you know which Holly to use? How do you know which Holly to use? Can you explain the differences? Yes, very good question, Jenny. All right, so as you've noticed, we have 3 different AI modules over here. All right, what are the differences between these modules? Well, little history lesson here. Holly Grail, or what we refer to as Holly 1.0, was the very first AI module that we brought online. Later on down the line, and of course, I will say this about Holly 1.0. Holly 1.0 uses all of the, what I like to call the off-the-shelf filters and alerts, which everybody has access to. So I just clicked configure on an alert window, and just all of the predefined alerts and filters that are available to you, me, and everybody else, that's what Holly 1.0 uses to configure, optimize, and backtest your strategies. Notice these U prefixes down here. These are all my custom formulas. Holly 1.0 does not make use of custom formulas. It's just all of the off-the-shelf alerts and filters. Well, once we got a little bit more complex, did some more coding, that's when we brought Holly 2.0 online. Mechanism is the same. It optimizes, it backtests its strategies every night, but it is capable of using custom filters that we make available to Holly 2.0. So the major difference between 1.0 and 2.0 is that 2.0 can make use of custom filters. Now, Neo is the latest iteration of the AI. Not only can it use custom filters, but the way Michael has designed it is it's the most aggressive of the trio. So typically you're going to see Neo with the big winning days. On the other side of that coin, it can have the big losing days as well. And it also makes use of custom formulas. So that's kind of the synopsis of the differences between all of the modules there. Now, the other part of the question, how do we know which module to pay attention to? And I wish I could tell you that, but we never know. Okay, that's like kind of like saying, well, which stocks are going to go up for the day and which stocks are going to go down for the day. If I could predict that, man, I'd probably be on my own private island, just looking at my screens, figuring out what I was going to do next because I'd be uber, uber rich. So just like we never know for certain which stocks are going to go up, which stocks are going to go down, we never know for certain which AI module is going to perform the best. And especially if you're new as a trader, notice what I have up here. I've got strategy trades, all trades. This is showing me all the trades as they come in. Doesn't matter which module we have issuing the trade. So especially when you're brand new, kind of keep this in mind. If all of a sudden you had the opportunity to sit with a human trader that had been doing this for a very long time, that traded with statistical perfection, okay, that's what Holly is, okay? Holly trades with statistical perfection. There's always statistical odds on any of the plays that are going to be generated from the AI. Now, does that guarantee success? Absolutely not, because, let's use the card counting analogy with blackjack in Las Vegas. The reason they don't want card counters there is because over time, if they do it correctly, they've got a statistical edge, and they might have some losing sessions from time to time, but overall, they're going to beat the house out of some money. And that's why casinos do not like them there. That doesn't mean that a guy can't have a losing streak or a losing month or a losing year, okay? but the premise is we're using statistical viability to give us that edge, okay? So keep that in mind if you're new and you're watching Holly, and treat the AI as another high quality information stream, just like some of your favorite windows or top list or anything else that you like to take your trades from, okay? There's nothing wrong with sizing up the pattern. Is it conducive with what you like to see? You know, how's the volume in it? Does it have good volume? You know, I just pulled up GIII at random here. We can see it finished the day trading 5.15 on the relative scale, all right? A lot of the times, and as I was talking about earlier, I'm not seeing a lot of these patterns today that are some of my favorite ones where we get the signal and then auxiliary pattern might play out. I'd say PM, Philip Morris is the one that was closest to that. If we take a look at Philip Morris's volume today, 1.56 on the relative scale, not too bad, 50% above normal. We got a nice clean entry from Holly right here. And lo and behold, as this thing moves sideways over time, once we get into this area here, then I'm starting to think to myself, hey, this auxiliary range break might play out. If it goes up here and pecks at this level right here with some volume, then it might be good to add to the position. Now this one kind of an anomaly because we usually don't see these this late in the day. A lot of the times we'll get these early in the day with 2 or 3 hours to go, which gives us plenty of time to track and go, hey, Holly brought this to us with statistical viability. A pattern that I like is also playing out, so I might leverage my position here, or if I never took a position with Holly over here, once this secondary pattern plays out, I might use that as my entry point, okay? So I hope that makes a little bit of sense there. I think that was, I forgot who asked that question there. Let's see, I think that was, yeah, that was Jenny's question. So Jenny, I hope that sheds a little bit of light. You know, we never know which one's going to perform the best, so it's best just to watch every play that comes through, and over time, you know, you'll start to pick up on these plays and auxiliary patterns and the things that you like to see. All right, Steve, I see you knocking out those questions there. Is there an explanation somewhere for what the strategies for the obvious titles are? Yes, I think, well, I don't readily have access to that link there. Maybe Steve, you can find that
Yeah, I'll
link
drop it.
and drop in
Can
there.
you hear me?
Sure. Yeah, no problem.
Oh,
Thank you.
but I was going to say I'll drop it, but Bert, I'm sorry, has a good question, and it might pertain to the closest best solution would be our one-click chart buy and sell buttons. If you want to elaborate on that.
Right. Can I set up Brokerage Plus with hot buttons like I currently use in IBKR? Yes, you can. Okay. Let me get my B plus over here and get my, I'll just put it on demo for now. Stand by 1 sec. Okay. So here I've got Brokerage Plus. I just put it on our simulated trading mode. Now, notice the little buttons up here. There's a couple different ways you can do this, okay? Number one, the way I prefer to do it, and the way myself, Steve, Andy, and Michael all do it in the fund we trade, is we like to use the right-click functionality. So what do I mean by that? Well, notice these strategies that I have set up here. Long 2K, short $2,000 worth, buy $1,000 worth, short $1,000 worth. These are technically what we call strategies, all right? But they're not really strategies. They're what we like to call order entry scripts because there's not really an alert window behind this. I've just set up some trading instructions. So if I right click and say edit the trading instruction, then obviously this is for going long. All I do is set up my order details and say, do $2,000 per trade. Do I want to go limit or market? If I am going limit, what's my delta? We're going to have it in here. And then you can employ any other risk management like stop losses or profit targets, hold times, okay? But there's nothing, you know, there's not going to be a strategy spitting out symbols. So for example, any point in the day, whatever stock might be up here, if I want to buy or sell or short that stock, I simply right click, go to trade, and then pick the little entry script or strategy as we could call it, and click buy using that. And it'll just boom, 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 it'll buy it for you, that amount, with your limit delta in place or going the short mechanism as well. Now, that's the easiest way, I think, and that's the preferred method that me and some other guys here like. But you also have the option of setting up the buy and sell buttons up here, but you would have to assign one of these as your default chart buy and sell button by right clicking. And for example, if I wanted buy $2,000 worth long to be my default chart long strategy, I would click it. Okay, now when we come back, you can see that this script is set up now to where in a live market, if I wanted to buy, all I would have to do is hit that buy button and it would execute for you as well. So Bert, I hope that kind of, illuminates that topic for you. If you need me to go into any more detail,
I
just let
was
me
going to
know.
clarify on that last bit. You said you hit the buy button once activate it, and then
Correct.
the second click is where you want to drop your limit order. So it's actually like a 2-click process.
Right. And I don't know if it's because it's after hours that it's not
I think
letting
it's after hours,
know.
yeah.
Yeah. But as Steve says, you click it and you set your line. And if this was live, you would be able to move your buy or your sell on the chart, and that would also adjust your price for you. All right. So if you need any more details on that, Bert, just let me know. Otherwise, let me check my time here. Yep, we got plenty of time. All right. So, and Donald, if you're not seeing anything, you might want to try logging out and logging back in. That's the only way I know to potentially get rid of some snafus and go to webinar. All right, so I was talking about earlier the container functionality, which hopefully is approaching beta status. So I'm gonna give you guys another peek, all right, at a little thing that I've created. I've taken our sector channel, sector status, okay, and I've modified it a little bit. So tell you what, let me load it from the cloud. And this is a take on an old theme that I came up with many years ago. That I used to call the heat map, okay, which was a bunch of compare count windows all pointed to different sectors. And you could see kind of in the same vein as I was describing my big cap compare count window, where some of the action might be. But when you have all these windows, it's not so easy to maintain, okay? But with the container functionality, it's a little bit different of a story as far as the ability to manage a layout or a window like this. All right, and it looks like everything came back up the way it should, with the exception of this little guy down here. Now keep in mind, there are still a few bugs to be worked out, so it looks like I lost one of my compare count windows. So these are all of our sector top list. You can see up here, technology, healthcare, the spider sectors, consumer, discretionary, XLV, XLY, XLI, energy, okay? And notice this is in a container mode. So I can quickly move it away, I can minimize it, I can pull it back up. More importantly, I can keep this up during the opening 15 minutes. And what I've done is I've taken each one of these windows and created its own compare count window right underneath it. So I kind of ran out of room. So some of these are, we got 2 over here. These are a little bit bigger just because there wasn't enough to to pack them into where they all look like this. But this is going to be a much more efficient way to manage a layout with sectors and compare count windows so that we can easily move it around when we want to use it, and then when we don't want to see it, we can just quickly push it off the screen or minimize it. And of course, you can have many of these. I'm not sure exactly what we're going to cap it at yet, Steve, as far as how many docked windows you can have. I'm sure there will be a limit, just don't know what it is yet. But obviously all of these compare count windows aren't doing anything because now the market is closed, but just keep in mind, moving forward, you've got all the major sectors and the tracking ETFs and the components, and in the same fashion that I watch my big cap compare count window, this is going to be a more scientific approach of where you might want to focus your energies for the day for the setups that you like to play. So after the first 15 minutes, you're going to notice that some of these sectors are having very bullish or very bearish compare counts for the stocks in that particular sector. And this can be very valuable, just like the large cap compare count window can be. But this is, in essence, going to be more or less a heat map telling us, okay, what sectors are going to be in play for today, and how much volume are they doing compared to normal, and then that's going to give you a list to take a look at, and then looking for those conducive chart patterns. And it's not necessarily going to guarantee, just buy everything and it's going to work, because once again, we still have to adhere to the technical aspects that are going on here, but it's definitely going to give you a hotter pool of stocks to focus on for that day, because rotation is in play here and there. Even when rotation is not in play, some of the stocks from a technical perspective are due for a bounce. Maybe some are breaking out. So this should be a pretty good tool for helping you guys find the hot sectors for the day and have a container mechanism where it's easy to watch and easy to move around. Now, I would share this with you, but you would not be able to use it yet. But don't worry, I'm going to keep it around, and hopefully maybe by the next Monday rolls around, we've got the 5.5 beta available for you guys to start using. But I will keep the cloud link around so that when you get it, all we have to do is dispense the cloud link to you. That way you don't have to go through all this process of building this heat map for yourself. And of course, I'll probably change the compare count windows to black because, I don't know, the white seems a little blinding. But that's what's coming down the pipe, hopefully sooner than later. And as we were talking about earlier, well, maybe the IWM is going to usher in the next leg up. Maybe it won't. We just don't know yet until it happens. So I prepared a couple of modified top list and one alert window focusing on the Russell 2000 in the form of a simple top list focusing on relative volume. All right, if we pop in here, I've applied just minimal filtering because all it's doing is looking at the Russell 2000, just trying to keep the uber thin stocks out, saying minimum daily volume over the past 5 days, 300,000 shares. If we go to the list here, you'll see we're only pointing, ooh, wait. There we go. Okay, I forgot to uncheck this one, but it's only looking at 4 symbols anyway. But you can see here, we're only pointing to the Russell 2000. Now, simple is better a lot of the times, and that's what this top list is geared for. Just looking at the Russell 2000, and we're sorting by relative volume. So high volume stocks, Russell 2000 might be worth taking a look at. The volume is there. We have position and range to give you an idea. Hey, is it in the lower part of its range for the day? Is it in the upper part? All right. Also got 5-minute volume to let you know if we do see a high relative volume metric here. How's the volume doing in the smaller time frame? 1 minute's too small, 10 minutes might be a little too big, but 5 minutes is typically just right. So if you see corresponding high numbers over here in the 5-minute volume, just remember, it's not the same as relative volume. Relative volume 1 is normal, 2 is 2x, 3 is 3x, but over here in the smaller time frames, these are percentage values. So in the 5-minute column, 100 is normal. So 2700, 27x, so forth and so on. Now, as we know, the Russell 2000, a lot of stocks in there, but we don't necessarily want to have a top list which we can max out at 1,000 stocks up there, because that'll kind of bog you down on that refresh. So what I've done here is I've just put it on 200, I believe. If we got a time frame, set record count, you can see it's going to be showing you the most highly, or not highly active, but the most high volume from a relative perspective in the Russell 2000. So we just call it the top 10% sorted by relative volume. Now, of course, you might want to add some more columns here. These are just some of the bare metrics that make a lot of sense to me. So I'm Going to go ahead and drop this one in the chat panel. Russell high volume top list. And then what I've done is I've taken one of Andy's high volume windows, which is very popular, and high-low pro, also focusing on volume, but using the high and low of the day as the trigger. You can see here in the long version side, and this is a multi-strat window. It's going to have two strategies in there for stocks hitting highs, stocks hitting lows, but I've also taken the liberty of pointing both of these to the Russell 2000 as well. So you're going to have two different strategies, stocks hitting highs, stocks hitting lows, looking for that crazy volume, but only pointed to the Russell 2000. You know what? I just realized that I misspelled that. So what we're going to do here is change that. Fingers move faster than my brain sometimes. All right, so we're going to share this one out as well. High-low pro, Russell 2000. All right, so both of those should be in the chat panel now. And while we're talking about the small caps, okay, I'd be remiss if I didn't briefly talk about these two windows here, UT high and UT low, which typically are looking at the smaller cap stocks. Did have a couple of really clean opening range breaks from the long side and the short side today. I think we got enough time. I tell you what, we'll look at the long side today. That way we don't have to worry about is it borrowable or not. But had some really nice setups. Number one, in ACIU today. Now here we are looking at the 5-minute candles, and you can see just a perfect little consolidation period there, leading up to the 9:45, 9:50 area. So not quite 2 hours. I mean, that's a nice little period of consolidation there, ACIU. And guess what? As soon as we break out of this little point right here, we got a nice follow through. So the beautiful thing about these is if you're diligent enough, you'll stumble onto these because they can't break out of here unless they're popping a new high right there. All right. We got extremely low risk on this thing because the lower part of the prior 15 minutes, and keep in mind, these are 5-minute candles as opposed to 15. So 5, 10, 15, that was our risk area way down here, this little bitty risk area right here. And then we got some major follow through. What's the market cap like on this guy? Well, not even $1 billion, 582 million in the market cap there. So what we could consider small cap. ACIU, not too bad. Don't know how many times we could fit that risk into that reward area, but just rough balling it here, 637, all the way up to potentiality of 825. So a very nice intraday move, one of the best ones I saw for the day coming out of this window right here. And the other one, ESEA, pretty much the same, except not near as long as a consolidation period, 5, 10, 15, 20, right here, perfectly at a 30-minute opening range break. Signal coming right about 1682, low of the prior 15 minutes, 1, 2, and 3. So 1623 risk, 1686 entry, not bad. And of course, running all the way up to 2140. Gee, what's the market cap like on this one? Ooh, even lower, 141 million, okay, Euro Cs. So deep sea freight transportation, that reminds me of dry ships and all those shipping stocks. Don't have access to it right now, but I wonder what the Baltic Dry Index Goods is doing right now. I'll have to take a peek at that later. So once again, I will also drop this long ticker in here as well, in case anybody wants to keep an eye on that as well, because it does spit out some nice small cap stocks. which just might be in play for the rest of the week. All right, so all of those are in there. And Anna, there it is. I just see your question there. Now, Jenny, if you're talking about the symbol list for the Russell 2000, all you have to do to access them is go into configure on an alert window or a top list, and you'll see here, I've got the Russell 2000, it's checkable. But if you don't see it over here, more than likely it's because you've never added it. So all you would have to do, hit add existing list and just scroll until you find the list that you're looking for. Of course, now that I said that, there we go. Okay, notice it's blue on my screen. That's because I've already checked it. But over here, infrastructure won't be showing up, but as soon as I click on it, you'll notice now I have infrastructure as a checkable list over there because I clicked on it from the add existing list button. So hopefully that clears that up for you. All right, so we're bumping up to the top of the hour, so it's that time where Scott's gonna walk us out and let you guys know how you can save a little bit of money on a new sub or an upgrade. So Scott, if you're ready, we're ready for you.
Great, thanks, Jamie. Yeah, a couple items on the way out. Everyone should make sure that they have the strategy indicator ebook. It's free. It's written by our director of software development, Dave Mabe, and it's provides some insight into how to use strategy indicators, and got some cloud links in there you can import directly into your layout. So just go to tradeideas.com/strategy for that. There's a podcast. We've released some interesting episodes this year. Just search for Trade Ideas Podcast wherever you listen to your pods. Add us as a subscription. Grab a couple of past episodes, and then you'll be ready to catch the next one as soon as it comes out. There's a code, Sunshine, if you decide to start up a new subscription or do an upgrade. Use the code Sunshine when you check out to save 15% off your first installment of any new subscription or upgrade. And Jamie and Steve are on Twitter. You can find Steve at TISTG, find Jamie at QuantBot. Also have at Trade Ideas. Find us on Facebook at Trade Ideas Pro. And any questions, email info@tradeideas.com. Goes to our help desk software, to our support team, gets you the answer you need as quickly as possible. So the recording will be available later on tonight or tomorrow morning. And we'll send you an email reminder tomorrow with some tips on how to find it. Thank you, Jamie. Thank you, Steve. Have a good one.
Thanks, everybody. Hope everybody has a great trading week, and we'll see you tomorrow.